Good morning, everyone. My name is Jamie Schenker-Passero. I am the Associate Director for Temple Small Business Development Center. We help small businesses start and grow. And since the pandemic, we've been doing almost all of our services virtually. This includes our one-on-one consulting, which is still available. And it also includes our virtual trainings like the one we are doing today. I will post in the chat box our resource page that we are updating daily that includes information about consulting, about our open office hours, links to our upcoming webinars, as well as links to recordings of previous webinars. Today, we have scheduled a workshop that we've actually had on the calendar for quite some time, since pre-pandemic times. And we're excited to be able to continue to offer that. So we have Bill Monax from Parke Bank, who will be talking to us about lending. So preparing to meet with a commercial lender, which is a really important topic. We want to make sure that our clients are not wasting their precious time by not putting their best face forward, by not being prepared. So that is what we are going to talk about today. We have attendees muted, and you can use the chat box or the Q&A box to ask questions, and we'll get to that towards the end. So there'll be about half an hour of content, and then we can get to your questions. So I will give the floor to Bill to share his presentation. Thank you for joining us, Bill.
Okay, great. Thanks, Jamie. Just a little bit about myself and Parke Bank. I've been in banking for about 15 years, mostly as a commercial lender. And my job, I love it. I help businesses succeed. Hopefully that's what I can do. Sometimes it's not always possible because of economic or financial conditions, but that's what I'm here for. And talked a lot of people off the ledge over the last 2 months with the SBA PPP program. I really feel sorry for, I have empathy, I would say, for a lot of people in the retail industry right now, restaurants, bars, those type of business, clothing businesses. So my heart goes out to you guys, and if I can help you at all, let me know. Parke Bank is over a $1.5 million asset bank here in the area. We have 7 offices from South Jersey over to and 2 in Philadelphia. So we're a pretty good sized bank. We have a good lending limit. We utilize the SBA and the 504 programs for a lot of startups. So, we do utilize those programs where we need to have those if somebody can't fit in the normal commercial lending box. So what I really want to go over today is what you need to do to be ready to meet with somebody like me. What are all the things that you need to get ready? What are the things that you should know? So let's get right into it. And then I know that after we get done with the presentation, we're going to have questions, and we can stay along as time permits. Some of the topics today we're going to be talking about is sources of business funding. Now, there's other aspects besides banks that you can look for. I'll give you some ideas on that, but I'm mostly going to focus in on getting ready to meet a bank. And it wouldn't hurt for you to know all this information if you were going to go to see Jamie's crew or go see somebody like SCORE, or you're even paying somebody to help you. It would be really beneficial for you to know a lot of this before you get started. We're also going to talk about the 5 C's of credit. These are the pillars of which banks look to in extending credit on loans. The next thing would be what's in it with your credit score? Why do we check that? What are the things on there? What are the things that you should do to probably prepare to have that in a little bit better shape than maybe what it is in now? And then what should you get ready for the bank? What should be in with the loan application? So getting started, very rarely are you ever going to be able to have a complete loan that will cover all your costs. Banks like to have some skin in the game, capital in the game, and equity investment for you, by you. The amount will depend upon if it's a commercial loan by the bank or if it's going to be a small business administration loan. And we'll go over what the SBA is typically looking for. Also, you can do the equity side by bringing in a partner and you each put in your own money and start the business that way. You can bootstrap, take money from family, friends, people, any way that you can scrape together some money. You can borrow it, off of a home equity line of credit. It's a little difficult when you do something like that if you're going to use part of that as your down payment in conjunction with a normal bank loan or SBA loan, because that is not true equity in. But if you can borrow it through a home equity loan, that's another source. Money that you can borrow through a business loan, which is what I'm going to be talking about today. There are micro lenders out there. There's the CBACs in Camden. There's the RBACs up in Trenton. There's a lot of other organizations like the PIDC, the Entrepreneurs Forum. There's a lot of different organizations out there that can help you. And they will help you with the non-traditional bank type of loan. So banks maybe you don't like to do a $25,000 or a $35,000 loan. These are perfect organizations for you to go after. We talked about state and local, and we're going to talk now about going to bank financing. So what do you really need to get a yes? It's not as difficult as it sounds. You just need to know your stuff. The first step is to strike up a relationship with a bank. Strike up a relationship, you could start at a local branch. But a lot of times the branch managers will pass this on to someone else. They won't see it through. So your ultimate goal is to get to a lender at that bank. Your branch manager can be an advocate for you, but they most likely will hand it off and that will be it. They will be out of it until it's approved. I would definitely try to get with any type of a commercial lender, SBA lender at a local bank. And you need to look for a bank that is going to really fit your profile, fit your way of running your business. We did see some problems with people not having a banking relationship during this PPP and this pandemic. They didn't know how to go about it. They didn't know anybody at the bank. So this is a reason why to strike up a relationship with your bank and not to just, have a blind eye and run your business, on autopilot. So that's my beginning talk on why you should really have a relationship with a bank, because banks will understand your particular situation and try to help you out. We don't want it to go to it's a dire strait where we have to default the loan. We want to see if there's a way we can work with you. And in a situation like the past couple of months, when there's a special program that comes along, to be able to help our current customers and even potential new ones that are going to come into the bank. So we're not cold-hearted people, but we do have to answer to a higher authority, which are our federal bank regulators, the FDIC, the state insurance and banking departments. Also, we need to really be held accountable by our depositors and our shareholders. So we're in business to make money too, and we just don't make haphazard guesses. We have to do educated guesses and mitigate the risk on any loan that we see. Also, the regulators are really, it's a hot topic these days. They really are on banks to make good loans and not bad loans, obviously. But they ask us all sorts of questions that you would not even believe. And even going into a loan committee, I may think I have everything answered and I get hit with something from either management or from the board of directors that, it came out of left field. So things are always ongoing and changing. We did talk about micro lenders. We talked about community-based lending programs. We talked about There's a community advantage lenders in the area, like uh, New York Business Associate Lending, Prudent, and all these other people are the ones that are kind of into that ball game. So if you're in a disadvantaged area, they may be able to help you out. They may have a little bit different types of I guess, credit criteria to help you get the loan. Also, there's online platforms. Be very careful with these. The Cabbage of the world. These type of organizations are very fast to give you a loan. They really charge high interest rates, and they also will have this on a very accelerated payback. A lot of times it will come from, if you're a business that uses credit cards, it could come from your credit card payments from your customers. Be very careful. Also, PIDC and the state and local also have a lot of different types. And if you're in New Jersey, the EDA has programs too, which are available. So when you're going to ask somebody to lend money, the lender's going to be looking for a lot of things, but specifically, here's a couple things to think about. They're going to be looking for a business owner that knows his business inside and out. And I can't really emphasize enough to you how important that is. People think, I've had instances where people say, well, I'll just get somebody to write my business plan and we'll go from there. Or I'll get my accountant to do the numbers, and they don't know their numbers. You have to know how your business is going to operate, who's your target market, who are your customers, how are you going to operate it operationally, and know all your numbers. You have to know your numbers. If you don't know your numbers, your banker, it will turn them off in an instant. Because if you can't explain it to me, how am I supposed to understand it? And if you don't understand how you're going to be making money and watching expenses, then how do I have any faith in you to really be able to make this a success? So we're looking for financially sound businesses. Or if you're a new startup, why should we be taking a chance on you? Look at it from the perspective that this is your money that you're going to be lending out. Maybe you're going to lend some money to a friend. You want to make sure you're going to get paid back. And that's exactly what the bank's looking for. So, you have to be able to show that you can make money, that you can pay your bills, that you as a owner can also make a living off of that, and obviously pay the loan back and pay the bank back, because that's what we're going to be most interested in. Also, what do you have to mitigate our risk in this particular loan? The days of grants and loans are and free loans and no collateral loans are very limited. Everybody got, I don't want to say got lucky, but you had to do it this way because of the way the economy was running. But a lot of these PPP loans could be forgiven, so they're almost grants. That's very far few in between that you ever see that. So also what we have to look at is what type of collateral do you have to put up to help make the bank feel comfortable that you have a lot of skin in the game, and if the worst ever happens, that we were able to try to get this loan repaid. So in a startup situation, you're going to be required to put up your house if you have a house. You're going to be requested to put up whatever assets that you have that will make sense to the bank. Banks a lot aren't looking to take your car and smaller things like that. They're more interested in things that will have some meaning, that they understand the collateral on, that you will take the bank seriously and make this thing a success. Investment from the business owner. Obviously, we're looking for you to put some equity into this business. Number one, it reduces the risk for the bank because we don't have to lend 100%. Number two, it shows that you as the business owner has a real interest in making this business a success. So not only are we looking for the collateral to get your attention, but also we're looking for your own hard-earned money that you're going to put in here, and to make sure that you have some skin in the game, as we say. Now, here's what we look at in the banking industry, the 5 C's. First thing that we're going to look at, and we're going to go through each one of these in some type of detail, but what I'd like to do is we'll go individually through these, and then we can come back and talk about any of these that you may have questions on. Character. What type of person are you? Well, we really don't know that. So what do we have to judge that by is a credit report. That's why your credit is so important, because for somebody not knowing you, we can learn a lot about you through your credit report. Number one, we can see obviously what the overall score is. Is it a good score? What type of things have you done in the past to pay back money that you've owed to other businesses or credit card companies, banks? Have you paid your mortgage on time if you own a house? Do you have collections? Do you have tax liens on your credit report? These are all things that we look at. And, do you have any defaults on loans? Do you have any derogatories because of collection accounts or foreclosures? So we look at all these things. I always like to get an answer. Some bank or bankers may not do that. If you don't meet their overall criteria, they'll flush you out right away. If I think that this loan has a chance of making it, overall, I'll ask about certain situations like, why were you late on this payment? Why were you late on this particular mortgage? I also look at medical, and everybody comes up with medical. So I place a lesser emphasis on medical if I get a good explanation. But I always want to make sure any loans that you have with banks are being paid ultimately on time. Make sure you pay the banks back. You pay anybody else back if you're looking for a loan, because that also could go into your, if you come into a situation. Can this business pay it back, pay the loan back? That's capacity and cash flow. Are you able to make enough money to make a living, to pay your bills, and ultimately pay the bank back and pay it back on the schedule that's been agreed to? Remember, a loan agreement, a loan document, loan note is a legal binding contract between you and the bank. So you take this seriously, because if anybody's gone to college, been a business major, and you've taken business law, this is a very important document. So you need to understand that, and whatever you do in the course of your business, be very, very careful on how you tie your company up with contracts. It could be leasing contracts, whatever, but it's important. Collateral and guarantees. So what are guarantees? Number one, we're going to look for collateral that we can use to secure the loan and help mitigate the risk. And if the worst ever happens, a default, take that property back, take that collateral back, and help pay off the loan. You may not get 100% payoff, but at least we're looking to get something to pay it down. Now, the guarantees go into the other extent of that. Most banks, unless you're a corporate borrower borrowing millions and millions of dollars, or hundreds of millions of dollars, require personal guarantees on a commercial loan or on an SBA loan. So what we're looking for is a personal guarantee outside of the business who signed that you will personally and are responsible to pay that loan back. Guarantees in SBA can also change to a degree with, let's say, if we need to take a property, your personal property, as far as your home, we may need to get a limited guarantee from the spouse. But in a limited guarantee that is specific to the real estate involved, that is all that that person is guaranteeing. They are not responsible to pay back the whole loan. So yeah, there's different types of guarantees, full guarantees, partial guarantees. When you're going for start up a new business, they're going to be full guarantees, and there may be limited guarantees to real estate by the spouse. And a lot of times we come up with situations where the spouse doesn't like the other spouse to put up the house. Well, if that's all you have and you're not willing to do that, then why should the bank take a risk on you, is the way we look at it. So you got to be willing to be able to open up all potential collateral so that the bank can take that. Capital contribution is what we talked about. Capital and contribution are two different things, really, but we've lumped them into one here. Capital, in my mind, is what is the credit worthiness, what is the backup savings that this particular owner will have for the business if the business does come into some hard times. What we're looking at also is, in that capital backup, what are you contributing to this particular project that you're trying to do? And then the wild card there is conditions. This really runs the gamut. This can be economic conditions. It could be certain types of issues that we have socially, like we've had some civil unrest, those type of things. We're in a pandemic, so banks are very cautious on lending into certain industries. Obviously, restaurants, hotels, anything now that's been really hit hard by the economy and by shutting down the economy. And also, it could be things that you never even thought of. Maybe you're a landlord. What is the type of the tenant that you have in place? I had a loan that was just denied that I did not even expect, and it was denied because of the overall tenant, which I thought was a Class A tenant, national company, but overall they're not in good shape. So those are other things that come into play on a loan, why it doesn't happen. Okay, preparing to ask for the loan. What you should be is well prepared. Have a thought out and written business plan. And we're going to go through some of those steps. What are the parts of the business plan? And tell your story well. You have to be excited about your business. You have to get the banker excited about your business so that he can represent you when he goes to loan committee or when he goes to present this loan to his boss. So you have to know your stuff. If I personally cannot understand the business, I can't understand how the numbers work, if I can't understand it, I know for sure my boss is not going to understand it, and the credit department isn't, and it's not going to get approved. It's not going to get approved at all. So you have to know everything. It really do, as much as you can. Now we're talking about a business plan, and we need, part of that is what are the expertise of the owner and some of the key people that he may hire, resumes on those people. Here's a question that I get asked all the time by entrepreneurs. And this question, do not ask this question to a banker. It drives a banker crazy. How much money can you lend me? That's a terrible question to ask a banker. It shows you don't know your business. It shows that you don't know what are all your costs involved. It's how much can you lend me? Can you get, what's the most you can get me? Well, I don't know that. That's really a question that should be answered by you in your research, in your business plan, in your financial projections. If you're buying an existing business, that's a lot easier. You already have tax returns, and we can figure out if this is going to work or not. So are you going to be, what are the different things that are going to make up a startup budget? Is it going to be buying real estate? Do you have equipment, furniture? Do you have to hire people? These are all things that we need to know. So you need to understand what your working capital is going to be and how you're going to pay your money over the next few months to a year. We all know that businesses initially are not going to make money right off the bat. There is a ramp up period. And another thing that bugs me is when I see projections, and in the first year when we do an SBA loan, we like to see not only the annual projections for the next couple of years, but we want to see the monthly projections. Why do we want to see the monthly projections? Because we want to see if there is a realistic ramp up of revenue and expense to get the business going. We know at some point in time, a successful business is going to break even. And then from that point on, it should be in the black, making money. So at what point are you draining money from the business until you break even and start paying your bills and then making a profit? Is it 6 months, 8 months, 10 months, 15 months? We need to know that, because that is either additional money that you're going to have to come up with, or a potential line of credit will have to come help you get to that point. So that's a very important thing to understand, how long it's going to take you. And, don't take the first year of a particular revenue number that you think you're going to meet and divide it by 12, because that is what's going to happen on day one. You are not going to make that number. It's going to take you a number of months to build up to a number like that. And there's also seasonality involved. If you're in a restaurant business, to know that the dire winter around the Northeast is tough due to weather. There is issues with people going on vacation in the summer. So, the cash flow isn't always easy and even through a year. You need to understand that. What type of loan are you seeking? Are you looking for a term loan? A term loan is a fixed amount of money that will be paid back over a fixed amount of time. So it's easy to figure out your payment. And from there, it's pretty easy. Or do you need a line of credit, which we had talked about? When do you need a line of credit? A line of credit is typically something that you will borrow and pay back in a year or less. A term loan is something that is going to be paid back a year or more. So we need to understand that. And a line of credit typically is the one that helps you with cash flow variations that go up and down due to seasonality, due to maybe economic conditions. So those are things. So I really recommend any business really having some type of a backup line of credit that they can use, in case that they need to tap into it, such as when we had the pandemic or whatever. Also, let me go back on that line of credit. If you're in a retail or a manufacturing business, a lot of people will use the line of credit to buy the particular raw materials or the merchandise. The whole idea is, I don't have money right now to buy that, so I have to borrow it from the bank. Let me go buy my merchandise. After I buy my merchandise, I bring it into the store, and then I can retail it, start making money on it, and pay back the loan. Do not let the line of credit stay at that level, because when people have a tendency, when they get paid, they think it's all their money to spend. You got to pay that back to the bank and lower that line of credit so that you, in essence, can borrow that again. Again, how are you going to pay back that money? How much can you afford to pay each month? That is why knowing your numbers are very critical. Some people in the past, when I've dealt with a loan, they cannot figure out their projections. If you can't figure it out, I can't. And if you can't, I have no confidence in you to lend to you. So you should be able to figure out in a reasonable amount of time what you're going to need and what you're going to be able to afford to pay back through the income that the business is going to lend you. I've had people do projections based on manufacturing output. That doesn't help me. Consumer demand is what really helps me. Yeah, anybody can make batches and batches of beer, but what is the true consumer takeaway? What is the true buying that is going to be done, the sales? So that you need to understand that and how to figure that out. And that's why we have organizations like Jamie's and other ones around the city and state that will help you determine that. But you got to be able to figure that out. Another way is go to businesses similar that you're looking to get into. Find a business that you're particularly not going to compete against in another city and ask them to help you if they will. Ask them, how did you do your projections? How did you figure out the demand factor? And if you aspire to be a business like that, maybe that's a good way to do it. Again, we're looking at how many months you can pay back the loan. Well, depending upon certain types of loans, you're not going to have a lot of time, or you're going to have a lot of time. It depends on what it is. If you're involved in real estate, you're going to get a lot more time to pay it back. If you're looking for working capital, you're not going to have as much time to pay that back. So it all depends upon the purposes. And also, what do you have as value for collateral to put up for this loan that you can pledge? We've already talked about that a number of times. But also, what is it worth? Because we're trying to cover the cost of the loan to some degree. So now we're going to get into the particular loan request. The financial condition of your company. Again, are you paying your bills on the time? Are you paying your bills every month? Here's something that drives bankers crazy. And I know that owners sometimes have no choice, but be very careful when you do this. You cannot write checks that you have no money in the bank for. It's really known as kiting. So you don't want to be doing that. And a lot of times, we'll have overdrafts, and the bank gets called every morning on business accounts. You got so much coming in today, and you have no money, and we need $1,000 to cover these to be paid. And we got to find out, do we reject it or not? And then when you reject the payment, you're going to get hit with a not sufficient funds fee. It's a lot of trouble. You really don't want to do that. So cash management is very important. Again, we're talking about the size of the loan. A lot of people think the more I can get, the better. I don't want to lend you any more money than you absolutely really need, because I don't want to put you into a particular situation in which you're going to have a hard time paying this loan back. So, if the loan, if you're flush with cash from a loan, you have too much money. There should be enough for a backup. Potentially, you should have enough in some savings or whatever to help with that, short-term needs. And that could be some long-term needs of the business, which could be, I need some plant and equipment over the next couple of years because I want to expand. That's fine. That's a strategy you need to have a conversation with your banker on. Again, get technical help. Again, Temple SBDC, go to any other organizations that are around town that can help you do the projections and write the business plan. They're not going to write it for you. They're going to guide you. So you got to do the work. And it's good that you know how to do it, because you'll become an expert on your particular business and you'll be able to talk to the banker about it. If your business is getting started, you got to think about all the startup costs and the ongoing costs that you're going to need to run your business. So the loan request is going to be the overall project minus the money that you're putting in. That's what the loan request is going to be. So when you think of the overall total, that's the project cost. That's not the loan amount. So figure out what your equity contribution will be. Now, just to give you an idea, startup costs could be on the left side of the slide there. Normal ongoing operational costs that you're going to have to do every month. Rents and leases, pay your salaries, your utility bills. A lot of people skip on these two things, legal and accounting. I recommend not doing that. Number one, legal, if you're involved in contracts or whatever, it's very important that you have a lawyer look over the contract and make sure that you are not promising or getting in a contract that's going to really put you in a bind. Accounting, a lot of people skimp on this. At the worst, or at the least, if you can't do your own books, have a bookkeeper. And make sure that you have that bookkeeper reconcile the accounts every month. You need to know where you are, where you stand. Ideally, if you know, a lot of people have dashboards and they can see where they're standing at any one particular time of the month. That would be ideal. Not everybody can afford that. So I would definitely look into that. Then there's going to be recurring costs that you may have, such as furniture. This is a big one in leases, building improvements and remodeling. When you sign a commercial lease, you're responsible for the upkeep on that property. You know, do you have a lease or rent deposit? You're going to need starting inventory. Do you have any franchise fees if you're buying into a franchise? Permits and licenses and fees and utilities and all sorts of stuff is what you got to really look into. Now, these are the key aspects of a business plan. A business plan should be able to have a description of your product or service that somebody can understand. Typically, the first part of a business plan should be an executive summary, which sums up the whole business plan in 1 or 2 pages. And don't make your business plan 1,000 or 100 pages. You know, make it adequate enough where somebody can understand what you're doing and, you know, the financials. Don't make it 2 pages, please, because that means you didn't put enough thought into it. So, I don't know, 10, 20, 25 pages at max. You know, everybody's is different. So you need to analyze your target market, because how are you going to market and sell to them? How are you going to generate demand so that we can get that top line number moving? What is your marketing strategy? Sales and marketing. Then the financial information. You know, how are you going to control cost? If you're a restaurant, cost of goods sold, your inventory, your food costs have to be in line with industry averages. That's another thing. Spend money on getting an industry report on your industry. And it'll have all the financials. It'll have all the particular ratios where you should be on your cost. Operationally knowing how to run your business. And this is something you might have to do. Maybe you're a sales guy, but you're not an operations guy. You got to hire somebody that can run the operations of the business, that's operationally strong. So look for people who can, you know, help you with the strengths that you have. If you're an entrepreneur, a lot of times you got to take all the hats. So you have to gain other skills and any key personnel. So what are we going to need? Well, this is the information you're going to need to submit to the bank. You're going to need to have what we call a personal, excuse me, a personal financial statement. And that's basically going to be a balance sheet and an income statement on you. So basically, a personal financial statement will run through your assets and your liabilities and your equity. And you're going to be required to list it. So like, what properties you own, how much money do you have saved? What properties do you own that are assets? What loans do you have against those as liabilities? You're going to need to do that. And the bank typically supplies you with that form. If not, there's plenty of personal financial statements where you can go out on the internet and get. We're going to require tax returns. Why? Because that's what we can trust. If you're lying to the IRS and you're lying to us, that's a big problem, and there's a lot more that goes into it if that's happening. So we look for filed tax returns. We look for financial statements that are either certified or reviewed or audited by by an accounting company. We can take compiled too, but there's not as much of a degree of confidence in those type of situations. But you have to talk to your bank. They will take all different types of financial statements, and we're going to require typically 3 years. And that would be included for an SBA loan. That'd be included for a normal commercial loan. And can you put this together? Yes, a lot of people are capable of doing this. Gather your personal returns, gather returns on the business, gather a business plan, put together your projections. But if you're not, there are resources out there to help you. Your cash flow projection, again, is the estimate of money coming in and going out and what is left over that would be ready for the beginning of the next month. So your projections should show how the loan's going to impact the business. So do you expect to have more capacity to bring in business? Is it manufacturing that you're going to be able to produce more? Are you going to be able to sell more? So we need to understand what the particular impact of the loan is on the financials. Again, assumptions are so important. People give us projections and they do not tell us how they got to those numbers. And banks are tough on that now because the SBA's got really tough on that. If I cannot justify a number through an assumption, it's not good. Then it invalidates the whole projection. So you have to be able to understand and say, yes, we should be able to get, in the restaurant industry, how many checks per day can we run through the business? How many we're going to run through breakfast, lunch, dinner? How many checks are we going to get a day? How much is it per check? How much is going to come in January versus May? So those are things that we need to understand. Be reasonable in those assumptions and knowing when the ups and downs are. Also use industry data to help you. And then expenses can be a little bit easier to predict because you got utilities, you got rent, different things like that. Tough things are your variable costs, like, if you ramp up and you're going to do more in sales to a restaurant, how much more is that going to be for your cost of goods? Key for you to think like a banker, think like a lender. If it was your money, would you lend it to yourself based on what you presented to us? And if you know that you got some holes in there, then you gotta play the what ifs. What can I do to show the bank that I can overcome this? What are the things that can make them feel easier about it? Being prepared is very, very, very critical. And knowing your stuff. That's that's the first thing that's going to really turn off the bank and the banker if you don't know your stuff. And you must know your business plan and your financial data. Also, please give full disclosure on anything that you're doing. Do not hold back. If you see a problem, you have a credit issue, address it and show what you have done to improve that. Don't let the lender raise it because it may show that you're trying to hide something. And make sure you have a good story to tell. For that right now, that's the end of my presentation. And I'd be happy to take any questions. Also, you have my contact information here. Jamie has a presentation. I don't know if she wants to send it out to anybody, but by all means, feel free to do that. I'm open to any questions that anybody might have right now.
Thanks so much, Bill. I'm not seeing any questions in the chat, but I'll give everyone a minute to post them. I really think that was very comprehensive, so I appreciate the presentation. And to reiterate, the Temple SBDC consultants can work with you as a business on getting prepared. So making sure that all of that documentation, all of that work is in order before you get to the bank, so you can make that good first impression. So please feel free to reach out and make an appointment, whether it's with a consultant that you already have a relationship with, or if you have not done that yet, you can set up a time to meet with a consultant for the first time. So let's see. Any questions in the chat? I'm not seeing any. I will send out to everyone attended the recording and the slides. Okay, I'm seeing, let me see. Okay, a question specific to Parke Bank. Are there any industries that Parke will not lend to?
Well, this changes as the economy does. Right now, we are being very careful on hotel loans, on restaurant loans. And I think I'd even have a hard time doing a restaurant loan using the SBA right now. But that, that depends on how we see it. I don't know. I'm not going to discount it. I'd take a look at it. I'd run it up the flagpole here to see if we'd have an interest in doing something like that. But I know hotels are definitely out right now. Other things, we're very cautious on construction right now due to the pandemic. Depending upon where it is, New York, Philadelphia, New Jersey, there are issues if the pandemic may come back, shutting down job sites. Is the loan for a essential business? That's a different story. Then maybe we'll do it, So it all depends. But right now on construction, we're only doing current customers, and that's not a guarantee it's going to get done. Other things that we're doing that because of COVID-19, on purchases of property and refis, right now, until we get a handle on the particular situation, we're requiring a full year of debt service to be held up front at the bank for a normal commercial loan. For an SBA loan, maybe not. Would it be an enhancement on an SBA loan that we would make us feel more comfortable? Absolutely. So those are some of the things that are going on right now.
Okay, no, that's good to hear about. There's another similar question specifically about the construction industry. So to that person, probably the best bet would be PIDC right now. Do you agree with that, Bill? If you're in construction and you're looking for a loan in that industry?
But again, it's going to depend upon what your loan's on. If you're looking to build a hotel right now, I don't think anybody's going to really lend to you.
Gotcha.
It's a tough situation. You'll probably find more state entities that may be willing to do something like that, whether it's in New Jersey, the EDA, whether in Philadelphia, it's the PIDC. Those would be probably good places to start at. Now, there are some banks, believe it or not, that are still doing construction loans. So it's going to be hit or miss by each bank and what they're comfortable in doing. But by and large, banks are, I don't want to say hunkering down because that gives a mentality that we're not lending. We are lending. We're just being very selective on what we're doing.
Sure. No, that makes sense. And I think PIDC has some products in response to the crisis, so it could be worth checking out what they're
offering.
Absolutely. Yeah. Let's see. I think that's it for the question. So we will wrap up for today. Thank you again so much, Bill. Really appreciate that presentation.
No problem.
I hope that everyone has a good rest of the day. We started bright and early, save the whole day ahead of you. I'm going to post, as I mentioned, our resource page in the chat right now, so give me a minute. And I'm also going to post a survey for today. We really appreciate your feedback, and we will email you a follow-up with that as well. First, here is the link. And I'm going to post the survey right now. But thanks everyone for joining us.